Hi guys, welcome back to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. Thursday morning, monthly FNO expiry day. So yes, gear up for a high action, high voltage day when it comes to the market action. But global cues are looking extremely strong this morning, and there has been a U-turn after a U.S. federal court has overturned or blocked Trump's reciprocal tariff that was announced on the 2nd of April. So in the aftermath, we have seen a strong rally coming in on global markets. Asian markets are in fine fettle. Nikkei Kospi up in excess of 1%. GIFT Nifty as well hinting at a strong start. Remember, back home we've seen a two-day breather. We saw strong rallies on Friday and Monday, but then we saw a two-day breather. But today looks like we are poised to make a rebound, and monthly FNO expiry, whether or not we manage to shut shop above that 25,000 mark, will be something that we will be watching out for. Lots of stocks in focus. IndusInd Bank, Bajaj Auto, SAIL also reported good set of numbers. So we'll be focusing in on these counters. We'll also be taking up all your stock related queries. So keep them coming in on our live feed. We will try and get them addressed during the course of the show. But of course, before we move any further, quickly take a look at the top headlines at this hour. Federal Trade Court strikes down reciprocal tariffs imposed by US President Donald Trump on what he called Liberation Day. The court ruling puts an immediate stop to the collection of a sweeping set of levies. Dow futures jumps over 500 points and the dollar index surges above the level of 100. Well, Wall Street ended lower overnight, but Asian markets are sharply higher following the US court order on the reciprocal tariffs. Nikkei up over 1%, while the GIFT Nifty hinting at a positive start. Somewhere around 80 to 90 point gap up is something we can expect today. SEBI passes ex-parte interim order in the IndusInd Bank insider trading case, finds prima facie violations by 5 bank executives, including former CEO Sumant Katpalia. Orders impounding nearly 20 crore rupees, bars all the 5 executives from the market till further orders. Big relief for former SEBI chairperson Madhuri Puri Butch. Anti-corruption ombudsman Lokpal has disposed of complaints against her in the Hindenburg matter. It has further said that there is no material evidence to order an investigation against Butch. And Elon Musk announces that his role as a special government employee in the Trump administration has come to an end. This follows his recent comments where he expressed concerns that President Trump's beautiful tax bill could increase the national deficit and work against the Doge's objectives. Well, then the top story at this hour is the fact that US President Donald Trump's tariffs were blocked by a US trade court in a sweeping ruling that the president overstepped his authority by imposing across-the-board duties on imports from nations that sell more to the United States than they buy. Now, the Court of International Trade also said the US Constitution gives Congress exclusive authority to regulate commerce with other countries that is not overridden by the president's emergency powers to safeguard the US economy. Remember, Trump had bypassed the Congress when he announced the sweeping tariffs on most nations. Now, minutes later, the Trump administration filed a notice of appeal and questioned the authority of the court. But in the aftermath of the ruling, texture of the global markets completely changed. Overnight, Wall Street shut shop in the negative territory, but Dow futures showing strong gains. Asian markets are trading with strong gains as well. GIFT Nifty is up. But, what will really happen from here on is something that we will be asking our experts as well, because this will probably land in higher courts, like the Supreme Court, and there will be a legal tussle around these tariffs. I don't know how really it will pan out for the global markets going forward. We will get in experts to answer that question. But about yesterday's trade, we saw, a pretty flat close. It was a range-bound session. Nifty Bank, however, managed to close in the green. Broader markets continued to outperform. The market breadth was neutral. NSE advanced decline ratio was 1:1. And auto, FMCG, these are some of the sectors that saw profit booking. In terms of fund flows, foreign investors or FIIs bought shares worth 4,600 crore rupees in the cash market. DII net buy figure was 7,900 crore rupees in the cash market. But remember, there was that big ITC block deal, so numbers will be a little skewed because of that. The put call ratio fell to 0.76 vis-a-vis 0.82 in the previous session, and no stocks in the F&O band today. RBL Bank was in the F&O band yesterday. It has come out of the band today. But to quickly bring on board our guest for today, joining me is Jatin Gedia, Technical Research Analyst at Mirae Asset Sharekhan. Jatin, great to have you on the show. Looks like we are poised for a good start. It is a monthly expiry as well. Would you still expect volatility to continue despite the fact that global cues are hinting at a pretty strong start for us?
Yeah, good morning, everyone. So, as far as our Mirae Asset Sharekhan research team is concerned, we believe that the Nifty has been absorbing all the selling pressure at 24,650 to be precise, the 20-day moving average, and it is holding on since last 12 trading sessions. Now, today being the the monthly expiry, we are expecting some sort of short covering because the early bump up that we will get will lead to some amount of short covering, because in the last couple of trading sessions we have seen a lot of short being built up on the indices because we have seen the PCR declining from 0.9 to even 0.66 levels in yesterday's trading session. So there has been a lot of short build up in last couple of trading sessions. Now we are expecting that build up to unwind and short covering to take place, so that will propel the markets higher. In terms of levels, we believe that 25,000 strike has a significant OI from the options chain, and if that is unwound during the initial first hour of the trading session, then we can expect a trending move on the upside. Technically, we believe that from a short-term perspective, post this expiry, monthly expiry is over, we are expecting a move towards 25,300 on the way up. So our trend is, as of now, remains sideways, but a move beyond 24,950, 25,000 will open the doors for another 300, 400 point kind of a rally. So 20-day MA, which is currently placed at 24,650, remains a very strong support. And on the upside, 25,000, 25,300 is our short-term target.
Okay, 24,650 crucial support zone, and those levels that Jatin mentioned on the higher side, those will be watched out for. But what about the Nifty Bank Index? Managed to shut shop in the green, came off the day's low. Here on, what are the resistance level we'll be watching out for on the index per se? And today, IndusInd Bank will be in focus. SEBI has barred the former CEO Sumant Katpalia from accessing market, and 4 others as well on charges of insider trading. Do you think this will be a very IndusInd Bank specific phenomenon, if at all? Of course, the shares will be under pressure, but do you think it will drag down the entire Bank Nifty, or do you think the charts of Bank Nifty are suggesting some strength? Even if IndusInd Bank falls, it will be fairly unscathed.
Yeah, see, in the case of Bank Nifty, 55,000, 54,900 is a very strong support, because therein again the 20 DMA lies. So we believe that any this stock specific news will not have a significant impact on the Bank Nifty. Yes, IndusInd Bank will definitely be impacted. However, we believe that at an index level, even if there is a minor knee-jerk reaction for the Bank Nifty, we believe that there is a strong support place in the range of 55,000, 55,100. So the impact might be limited on the index, but yes, stock specific, there will be a knee-jerk reaction. On an index level, we are expecting 56,100 on the upside as our short-term target, and post that 57,200. 55,000 and 54,900 remain a crucial support for the Bank Nifty. Overall, PSU banks came to the limelight yesterday. Most of the smaller PSU banks, Canara Bank, Union, Bank of India, Bank of Baroda, all gave breakouts from their consolidation pattern. So we are expecting PSU banks, to continue its positive momentum in today's trading session as well. Overall, Bank Nifty remains positive and a strong sector among the sectoral indices, which can hit a new all-time high over the next 1 week or so.
All right, that's the view. Expect all-time high levels in the next 1 week. But global-facing sectors will be in focus today, particularly the IT and metal sectors, in light of the Trump tariff order. Anything that's catching your attention from these two pockets, chartically, that's looking very strong and could be looked at for a trading play?
See, I believe that in between Nifty IT and Nifty Metal, I think IT has a better structure because Nifty Metal has been rallying since last many days, and some of the metal counters like Tata Steel are looking a little overbought on the daily charts. However, the Nifty IT has been consolidating since last couple of weeks, and that is showing signs that it will provide a trending move on the upside. So in between the metal and IT pack, I would prefer the IT pack to do well in the coming trading sessions. And in the IT pack, we believe that HCL Tech has a good setup on the daily charts. It has been consolidating. We are expecting a breakout in HCL technology. So HCL Tech will be the preferred pick.
Okay, HCL Tech will be the preferred pick here, but what about autos? Bajaj Auto will be reporting numbers today, and numbers aren't really expected to be great. Domestic sales are likely to be weak, and that will hamper revenue growth. EBITDA margin is likely to shrink by 10 to 17 basis point. Revenue expected to rise only 3%. However, exports may witness almost a 20% jump also on a YY basis. We have a couple of queries on the two-wheeler pack on our feed as well, wherein this gentleman wants to know, Rupak Mehta, whether one should look at TVS or Hero Motors for medium-term perspective. Throw in a Bajaj Auto as well. Between the three, would you be taking a bet on any of these for the medium term?
Yeah, see, I believe that most of the two-wheeler pack stocks are doing well. From that, I believe that Hero MotoCorp is also all the three stocks have good setups, but from a risk reward perspective, I think Hero MotoCorp has a better reward from a medium term perspective. That because that stock has been lagging behind, and I believe that the structure is favor for going longs in the case of Hero MotoCorp. On the upside, we are expecting levels of around 4800 to 4850 from a short term perspective. And the crucial support for Hero MotoCorp is around 4200. So, among the three, I think Hero MotoCorp has a good setup from a risk reward perspective.
Sure. All right, Hero Moto looking, is the better candidate among the three from a risk reward perspective. Hope that answers your query. But of course, we are getting the first ticks, and it is a strong start as was being expected in tandem with global cues. A triple digit up move on the index. We are above that 24,850 mark. In fact, inching very close to the 24,900 mark. 120 point uptick on the index as we speak. Sensex as well, 81,700. It's an almost 450 point kind of an uptick here. Broader end of the markets continuing their up move. The mid cap index is up 0.5%. Even the bank nifty is showing strength. It's up 0.5%, and the advanced decline ratio at the current juncture is at 4:1. Early days to really say whether or not the market breadth will be this strong going forward. But right now, firmly skewed in favor of gainers. Just want to see what an IndusInd Bank is doing. In fact, the IndusInd Bank counter is trading extremely flat. No big moves. I think which is why one reason why the Nifty Bank index is showing strength. It's around that 55,700 mark. Let's see what other sectors are doing, particularly the global facing ones like IT, metals, even pharma for that matter. The IT pack is up in excess of 1%. Yes, that's the top sectoral mover, so to say. Metals are also up almost 1%. Pharma is up 0.5%. And across the board, we are seeing buying today. All the sectors are trading in the green. Even the auto and FMCG pockets that have been witnessing selling pressure, profit booking, they have inched back into the green. The FMCG pack is flat, but it's trading with a positive bias, and the auto pack or auto sector is also Nifty auto index is up somewhere around 0.5% also. In terms of Individual movers, the list of losers is pretty slim today, so we'll take heart from that fact. But Infosys is the top Nifty gainer, 2% up move there. JSW Steel, a close second, 2% there. Wipro, Tata Steel, Tech Mahindra. So top 5-6 gainers are from the IT and metal pockets. HDFC Bank lending support to the bank Nifty, up almost 0.8%. Tata Motors is also up 0.7%. Adani Enterprises, Sun Pharma, TCS, HCL Tech, these are some of the other gainers. On the flip side, what's not doing well is Tata Consumer from the FMCG space. That's under pressure. Hindalco, despite the metal pack being up, this stock is not doing great. It is out of favor. HDFC Life, that was the top Nifty gainer today, is among the top laggards today. Ultratech Cement extending losses. Aisha Motors, Dr. Reddy's, Nestle and Maruti. These are the laggards for today. But looking at the open, some of these counters like Tata Consumer, Trent, FMCG has seen some bit of profit taking. What would you do with some of these names like Tata Consumer, Trent, even Nestle for that matter? Would you look at taking a positional bet on any of these names since they are heading lower now?
Yeah, see, I think the defensives like FMCG pack will likely to take a backseat from here on because I think the focus will now shift onto the stocks that are related to global cues. So IT metal is likely to do well. Apart from that, FMCG has also run up quite a bit in the recent past. So some amount of consolidation or some amount of pullback is likely in some of the names like Tata Consumer, Godrej Consumer. I believe that FMCG or the defensive pack will take a backseat as of now, and the focus will shift to global sectors that are related to like auto, metals, and IT.
Okay, that's the view then. I want to talk to you about IFCI. This stock has been on a solid up move. At 73 or 74 rupees. How would you approach this stock? Would you say that it's in a long term uptrend right now?
I would like to, get out of this stock in this pullback. Yeah, it has been a very good performer in the recent past, but I believe that there are other stocks to look at in this NBFC space, which can be considered. But IFCI is one thing that I would like to avoid, and if I'm holding, then I would like to book out in the case of IFCI. Fresh positions are not advised.
Okay, that's a view. Book out of an IFCI. Let's break it down to news-based stocks then. SAIL reported numbers. The stock is up by a percent or so. Numbers were an all-round beat. Profit came in higher by 11%. Revenue rose 5%. Margins, although were at sub 12%, vis-a-vis 12.5% on a YY basis, but they have still managed to better the estimates. SAIL within the metal pack, this particular counter, what are the levels to watch out for here?
Yeah, see, in the case of sale, it has been witnessing quite a decent run up from around 108 levels to 130 odd levels. So that's a decent run up in a very short span of time. So on the upside, yes, this rally can continue towards 144 odd levels. However, those who are already holding long positions, you should trail your stop losses towards 127 126 for that matter. So keep a trailing stop loss of 126 and continue to ride the up move there because of this run up in the recent past. There can be some amount of consolidation. However, the short term trend remains positive. So continue to ride the trend with a trailing stop loss at 126 for targets of 144 on the upside.
Okay, targets of 144 on the upside for a SAIL. Let's talk about Cummins India as well. Numbers were pretty okay. In fact, profit and margins were above estimates. The stock is doing fairly well, 3% up, and the last 1 month as well, it has given positive returns. Are you spotting any particular trend here? Because looking at the long-term charts, 6 months YTD, it's still giving negative returns. Could this, signal a trend reversal on the counter? What are the patterns you're picking up now on the charts of Cummins India?
Yeah, so technically, in today's trading session, it has broken out from a bullish flag pattern. So that is a trend continuation pattern, and the recent up move from the lows of around 2,700 has been pretty, structurally bullish. Means it's forming a high top, high bottom on the daily chart. So that is a sign of uptrend. And post this small consolidation, it is again breaking out. So that indicates a resumption of the uptrend. So we believe that this rally is likely to continue. On the upside, we are expecting levels of 3,300 in the case of Cummins India, and the strong support or the crucial support is placed at 2940, which is the 20-day moving average. So risk reward is quite favorable for going longs even at current levels. We are expecting a decent amount of up move from current levels.
Hmm. Okay, expect a decent amount of up move on Cummins India from current levels, but from Cummins to IRCTC, numbers came out, profits saw a 25% uptake, revenues were good, double digit 10%, but margins were slightly lower compared to last year. The stock has been fairly sideways if you look at the monthly charts, although of course, railway stocks did see, quite a lot of correction post the run up that they had seen. But do you expect the stock to remain sideways? And within the railway pack, how is this particular stocks stacking up now?
Yeah, so within the railway pack, IRCTC is one stock which has been doing well. We believe that post this sharp rally from 720 to 820 odd levels, it has witnessed some amount of pullback, or you can say it's going under a mean reversion. We believe that 770 is the level around which it can slip towards. So that's around 2% downside from current levels. However, there's a strong support around that 770, 760 mark, wherein the 20-day average is placed. So we believe that the downside from current levels is very limited, and it can resume its uptrend from around 770 odd levels. So those who are already holding or having IRCTC India investment portfolio, then they should continue to hold from a short to medium term perspective. Overall, we are expecting levels of 825 to 830 from a short term perspective. So continue to hold on. We believe that the downside is very limited from current levels.
Okay, IRCTC continue to hold and downside is limited. But let's shift focus to some other viewer queries that are trickling in at this juncture. I spotted a query on Mishra Dhatu. This one's coming in from Naveen, and the stock has seen a phenomenal run over the last 1 month. 35%, a breakout stock. If you look at the weekly charts as well, it has given good returns, and today reacting to numbers up 4%. Time to book partial profits, or would you say hang on because 52-week high level is still some time away?
I believe that Mishra Dhatu is or Midani is trading around 432 odd levels. It has broken out from a 5-day consolidation on the upside. So from a short-term perspective, I think this rally is likely to continue on the upside. One should keep a stop loss of around 410 for his trading positions in the case of Mishra Dhatu, and on the upside, 460 is the target area. So continue to hold with a trailing stop loss at 410 and continue to ride this up move. It's a strong up move. I think the rally is likely to continue.
Hmm. Okay, hold on. The rally is likely to continue. But let's take up a query on Reliance Industries then. This one's coming in from Komal Makecha. Wants to know your thoughts on this particular counter for the long term target and stop loss, but hasn't really mentioned a time horizon per se. But from a 1 to 2 year perspective, what is the target one should be watching out for, and the stop loss as well. The stock has done okay in the last 1 month. It has given positive returns, but above 1400, it is holding on to that level. So, long term targets then on this counter?
See, long term, I believe that Reliance is likely to do well. I think the recent correction that it witnessed from around 1600 to 1100 odd levels was a decent amount of pullback. And thereafter, on the monthly charts, we are the April month closed on a very strong footing around the highs, and thereafter for the month of May, we are witnessing a doji candle being formed. So that indicates only a sideways consolidation. Overall, the trend remains positive from a long-term perspective. In terms of target area, I think the previous all-time high is the immediate resistance or the target area, that is around 1600 odd levels. And from a support perspective, I think 1300 from a short to medium term perspective is a very strong support for Reliance. So 1300 and 1600 is the range. However, post this 1600
Hmm.
1600 level which is breached, then we can expect further up move.
Okay, those are the levels to watch out for. But as a disclaimer, Network 18 is and Moneycontrol, they are owned by Reliance Industries. So before taking any investment decisions, do consult your financial advisors. The next query then coming in on an Electra Green Tech. This one's coming in from Praveena. Wants to know your thoughts on the long term. The stock did come under renewed selling pressure after some negative news flow. The stock was down somewhere around 5% for the last 5 sessions. Today as well, it's under pressure. How should really one approach this stock? It's at 1220 at the current juncture. Would you expect the stock to break below the 1200, 1150 levels? And is this weakness here to persist?
The overall structure is still bearish. It's forming lower tops and lower bottoms on the weekly charts. I think until and unless 1320 is breached on the downside, there is a possibility that a stock, slips towards 1070 on the downside. So yes, the structure is weak, and from a medium term perspective, I am expecting further weakness in the stock towards 1070. So those who are currently holding, I think it's a good time to exit this stock at current levels.
Okay, exit at current levels. That's the view on an Electra. But the next query is on Ultratech from Vinod Patange. He is holding shares at an average price of 11,300. Wants to know if it's a good time to add more. The stock has been under pressure. Last 5 sessions also, it has shed somewhere around 5% or so. Is it a good time to average?
See, in the case of Ultratech Cement, the crucial support is placed at 10,916. So 10,900 is the good level to start accumulating or average. That coincides with the crucial Fibonacci retracement level. So yes, this recent dip that we have seen in the case of Ultratech Cement should be utilized to add to your existing positions. 10,900 is a very strong support, and we are expecting these levels to hold and resume its up move in the case of Ultratech Cement. Yes, by this dip towards 10,009.
Buy the dip, that's the call on an Ultratech Cement. Uh, let's focus in on the next query then. This one's coming in from Hemant Singh. Wants to know whether Deepak Nitrite or Federal Bank, any of these counters, are good candidates to enter as a positional or take positions in these counters. Uh, would you help him figure out which one is a better bet now, Deepak or Federal Bank? It's for a positional play.
I think among the, if I see it technically, then Federal Bank definitely has a more bullish structure than Deepak Nitrite, because the stock Federal Bank is in an uptrend, and Federal Deepak Nitrite is still in a short-term downtrend. So I think Federal Bank is a better candidate. It has a more bullish structure. In terms of levels, 216 is the target area or the resistance area, and the crucial support is placed at 197. So Federal Bank would be the preferred pick among the two.
Hmm. Okay, Hemant, Federal Bank is the preferred pick. I hope this helps you out. But next query then, and a couple of queries I want to quickly squeeze in because they are from the defense and shipbuilding pockets. There's a query on Garden Reach. Wants to this gentleman. I'm not getting his name. He wants to know your 1 year perspective on this particular stock, Garden Reach. And Nitin Shahji has a query on Cochin Shipyard. Both these stocks, how are they stacking up on the charts? And within the defense pocket, Priya Prathap wants to know your thoughts on BEL, Bharat Electronics. She is holding it for 382 and she wants to know how long should she hold. So, all these three stocks.
Yeah, see, in the case of Garden Reach Shipbuilders, I think it is trading now at an all-time high. So it's the rally is likely to continue, and the crucial target area that we are looking out for is around 3,200 to 3,250 on the upside. So that's the next resistance in the case of GRSC. Someone is holding long, then continue to hold, and the trailing stop loss level is 2,800 in the case of GRSC. Trend is positive, continue to hold. In the case of Cochin Shipyard, yeah, the stock has been, after a sharp run up, has been consolidating in last 1 week or so. However, the trend remains positive in the case of Cochin Shipyard. And on the upside, post this consolidation is complete, we are expecting levels of 2150 to even 2200, which is the previous swing high. So hold on to Cochin Shipyard. There is no trend reversal as of now. It's only undergoing a minor pullback or a consolidation post a sharp run up. So continue to hold. Trend remains positive. In terms of support area, 1765 is the crucial support for Cochin Shipyard, and 2150 to 2200 is the target area. In the case of BEL, so Bharat Electronics has been in a tear since last 1 week. We believe that 390 was the initial target area that we were looking out for. That has been achieved. So some kind of consolidation is not ruled out post this sharp run up. However, the trend, still continues to remain positive. The stock can slip towards 375 to even 360 from a short-term perspective. However, that dip towards 300 75-60 should be utilized as a buying opportunity. On the upside, 420 remains the next crucial resistance for BEL. So if someone is holding, then continue to hold with a trailing stop loss of 379 for BEL. Overall medium term perspective is positive. Utilize dips towards 360 as a buying opportunity.
All right, all the defense and shipbuilding queries answered there. But with that, we've come to the end of the query segment. Before I let you go, Jatin, recommendations for our viewers this morning?
Yeah, so I think, as I said, some of the PSU banks are looking positive from short-term perspective, and I think Bank of India has a good setup. It broke out from a triangle pattern in yesterday's trading session. Today, it's witnessing some amount of a pullback. However, we believe that this pullback will be bought into and it will resume its uptrend. So, Bank of India from the PSU banking space is a buy. In that, the stop loss should be placed at 116, and on the upside, I'm expecting targets of 129 in the case of Bank of India. Another recommendation would be from the IT pack, which is doing well in today's trading session. So Infosys is a buy. It has taken support at the 20-day average and it's resuming its up move. We are expecting levels of 1635 in the case of Infosys, and one should keep a stop loss of 1578 in the case of Infosys. So Infosys and Bank of India will be our preferred picks.
Okay, Infosys and Bank of India, two recommendations coming in from Jatin. With that, Jatin, we'd like to thank you for taking out time and joining in this morning. Always a pleasure, and look forward to our next interaction as well.
Thank you for having me.
Thank you, pleasure. Well, on that note, quickly take a look at the market. We've tempered down a bit. We've fallen below that 24,800 mark, just about 40 point higher on the Nifty, and the Sensex as well has pared its gains by half, the quantum that we saw at the start, just about 150 points higher on the Sensex. Mid caps have also given up most of the gains, and Bank Nifty has slipped into the red. So we have kind of fizzled out despite the fact that global cues are looking extremely strong. But let's understand the way forward from here. Joining me is Siddhartha Khemka, Head Research Wealth Management at Motilal Oswal Financial Services. Siddhartha, always a pleasure having you on the show. But this morning, there is this big news that a US federal court has struck down the reciprocal tariffs that were announced by Trump on the 2nd of April. Just want to understand now, will this lead to a long drawn battle, because these were the lower courts, right? So will it land in Supreme Court? Will there be a long drawn battle? And what really happens here on to all the negotiations that US is having with other nations? I mean, I will put it into perspective as to how you are looking at this entire scenario now.
Good morning, Nandita. Glad to be on the show. I think that's a big development, especially from the US lawmakers, at least from the judiciary side. Now we need to see how the lawmakers would take this, and what we believe is it would only provide a temporary relief to the global world in terms of the tariff tantrums that Trump has. And what we believe is that the negotiations would continue. The only, you can say, what can happen is that the pace of the negotiation could slow down, and the counter countries could use this as a pretext to not to rush into any settlement. To that extent, I think Trump will try to do something from the Congress and try to bring it up so that he can do those deals. As we know, he's looking to get into those deals and make it favorable towards US. Some of the countries which are in advanced negotiations, including the likes of India, I think that would continue the way it is. And because countries like India, they would want to have a long-term settlement and would not be dependent on how the court rulings in the US, be it a lower court, be it a higher court, or their main court giving out judgment. So till the time, trade cannot take a backseat. In the interim, it's definitely a big relief, sentimentally positive for some of these global cyclicals, the likes of IT, metals, pharma, from an Indian equity market perspective.
But talk about the pharma space. The outlook on FY26 have been pretty mixed when you look at the pharma, earnings. And of course, the factor that Revlimid contribution to top line will be missing here on. We've seen Glenmark, Aurobindo, recently report numbers. US pricing pressure was there. US sales were, at multi-quarter lows, etc. So, here on, how are you really approaching some of these stocks? Where will or how will they really fill this gap? Because Revlimid was a blockbuster drug and the contribution to top line was significant. Street seems to be divided on Aurobindo in particular. I was just reading some brokerage reports yesterday. So how would you look at these names that were drawing out good top line contribution from Revlimid, and how should one really approach these stocks now?
Definitely, I think, Nandita, if you look at pharma, there is a mixed bag. There are various sub-segments within the pharma space. While the US generics, there is definitely a lot of pressure, not only from the missing product business, but also from the pressure that the US is likely to put in terms of realization, in terms of growth, and in terms of how much entry barriers they are going to create for some of these Indian players. So definitely that's a mixed bag. What within the US generics, what we like Sun Pharma, given its diversified product base. So no single product will form a large portion of the revenue, and hence we believe it's much more hedged in this current environment. However, if you look at the larger picture within the healthcare space, what we like CDMO players. We believe there the growth opportunities continue to be pretty strong. So companies like DVs, companies like Laurus, where we see strong growth opportunities. And then the third part is the domestic focused pharma companies, the likes of Mankind, Eris Life Science, where we believe that there again the domestic growth story continues to be pretty strong, and they are unaffected by these global volatilities as well as the news flows coming out from the US. And last but not the least, but there is another segment which is the hospitals within the larger healthcare space. Again, a domestic theme, strong numbers, strong growth. Companies like Apollo Hospitals, Max Healthcare, they continue to report strong numbers and robust growth, where again we have a very positive view.
Let's also talk about one stock that has been in focus, IndusInd Bank. It has been staring down the barrel amid a credibility crisis. Of course, yesterday there was a SEBI interim order that said that in fact barred ex-CEO and 4 others from the stock market. The street seems to be divided about IndusInd. Many feel that valuations are fairly mouth-watering, but there is a credibility issue attached to it as well, right? Which camp or which side would you tilt to now, Siddhartha? At Motilal Oswal, what is your call on IndusInd Bank and how are you guys approaching this stock?
Yeah, definitely. I think companies like this, where they have a lot of credibility issues, valuations will become attractive, but at what cost is the question. So we clearly remain very cautious on IndusInd. We have a neutral rating, and we believe that there is still no clarity in terms of how things will pan out. Q4 was a very bad quarter. There were several accounting lapses and resulting in a negative ROA. The bank has recognized the full impact of these issues in the quarter itself, so leading to an impact of almost 4,600 crores on PBT. They are also looking at a sharp decline in the advances as it restructures or reduces its corporate lending, where a bulk of these issues are there. And the ongoing corporate governance issues that just keeps coming by. So the latest news of the insider trading from some of these key management leaders, I think that is also a big negative. So what we have done, we have cut our estimates by almost 45% for the current financial year FY26. So that's a big negative. So while stock prices have come down, I think it will take time for the bank to build credibility. They need a new CEO, a new management takeover, and with the new management, whenever that name announcement comes, I think they will take 2-3 quarters to do the cleanup to find out if there are any more cockroaches inside the kitchen. And once that cleanup happens, I think that's when things will start looking up. So for the next 1 year, I feel that this stock could remain under pressure. Yes, stock price has come down, but I think it's better to avoid IndusInd at this juncture.
Okay, avoid IndusInd. But another stock that was in focus was ITC. There was a bad stake sale yesterday, 2.5%. They had sold 3.5% last year in March 2024 as well. Numbers for ITC were good, but the stock has been stuck in a range. Here on, do you think there could be possibility of more stake sales from BAT, and could that be an overhang? Will the market wait for more clarity before the stock really takes off?
So yeah, Nandita, I think ITC has been a value stock within the FMCG space, and that continues to be the case. We saw outperformance some time back, but last couple of quarters, yeah, it has been. If you look at the entire consumption space of the consumer staples, that have been in a consolidation mode and has underperformed the broad market. But I think there is not much of an overhang from the stake sale from BAT because I think there is a good professional management. There is not much of dependency on ITC's business to that of BAT. And given the market size and the market leadership, the stock is well received. Even yesterday's 13,000 crores of blocks were absorbed well by both FIs and DIs. Q4 numbers were pretty better in our view. The cigarette business has been driving growth, has been driving margins. The non-cigarette FMCG business, that is yet to pick up. But if you combine the entire cigarette plus FMCG business, the growth has been pretty better compared to some of the FMCG peers. So we believe that this could be a good price point to look at ITC. The core cigarette business is doing well. Any recovery in the FMCG business, that could be a good re-rating trigger for ITC. Plus, the dividend yield continues to remain strong. So people who are looking at a value stock from a long-term perspective, ITC definitely fits in the bill. We have a buy rating and a target price of 525 from a 1-year perspective.
All right, 525 target in excess of 500. That's the target on ITC. But last question really said, we are seeing a renewed momentum when it comes to the primary market, right? We have seen issues like Leela, Aegis as well. But they haven't really seen a lot of retail demand, so to say. Here on, we are expecting a flurry of IPOs in June as well, right? But do you think the appetite has cooled off and focus has now shifted more to fundamentals, quality of promoters, etc.? How do you see the appetite for new issuances evolving here on?
So, Nandita, that's a good question. I think in this current environment, we are seeing the return of a lot of promoter blocks, which are again, in a way, primary issues. We have seen the return of IPOs. So that clearly goes on to show that the confidence of the bankers and the promoters in the underlying strength of the liquidity coming back into equity markets, and that is what we are witnessing last month, May itself. If you see FIs, DIs, both have been net buyers, and that is a phenomenon we generally see very rarely when both FIs and DIs are buyers. And who are the sellers? The sellers are either the third strong force that has become is the individual investors, or then the supply comes from promoters. Focus always will be on fundamentals. I think if you have a strong fundamental business that comes for an IPO, even in this market, that will see a lot of interest and subscription will go up. There are companies which have come with an IPO recently. I think there's nothing new to offer, or even the valuations are in line with the peers. For if you have the some of the names that you took, Aegis or Leela, I think that was not something that excited the individual investors. Hence, retail participation was pretty low. Institutions continue to lap them up. There is a lot of, despite the market fall, the SIP inflows continues to be pretty strong, 25 in excess of 25,000 crores per month. So those money will be used by the institutions to get into stronger names in the mid cap space, and any new IPOs or these blocks are being taken up by laps and bounds by these institutions. So that only goes on to show the inherent strength in the Indian market. So that makes me positive on the broader markets itself, and we will keep looking out for some of these newer issuers where we can find value for our customers.
Sure, point taken. But I just want to point out that we have completely fizzled out from the kind of gains that we saw at the open. We are just about 48 points up on the Nifty, and the mid cap index has completely flattened out. We have seen this trend of, even though a global market cues being very strong, we haven't really been able to sustain gains on those days as well. There has been a fair bit of decoupling, so to say. What is driving this volatility now? Of course, today is expiry day, but in the very near term, how are you reading into the movement, the market moves that we are witnessing?
So, Nandita, if you look at Indian markets had already reacted post the Trump tariffs, and we were in a way already factoring in that India was likely to get through that trade deal, and so not much of new development on that front. Even the quarterly results are now almost over. Results have been in line to better than expectations for the Nifty 50. Our expectation was about 4% earnings growth. We have ended at somewhere about 6% earnings growth for Nifty for the quarter. So I think with the market moving up closer to that 25,000 mark, I think some profit booking is taking place. There are not much of triggers on the market, both either on the if you see, we are not falling. Every fall is being bought into, but there is not much of positive trigger to take the markets higher. If you look at what is happening, while Nifty is consolidating, we are seeing a lot of buying interest in niche sectors or in the broader market. So broader market participation is something which is showing a lot of strength, and that is only making these IPOs and blocks to come into the market.
All right, point taken. Just around that 24,800 mark at the current juncture. With that, Sid, would like to thank you for taking out time and joining in. Always a pleasure getting in your perspective, and look forward to talking to you again sometime soon. Have a great day.
Thank you.
Thanks. And on that note, we've come to the end of this edition of Opening Bell. We flattened out, but still holding on to the positive territory. Let's see how really the day pans out. But the advance decline ratio is also even Stevens now. It's tilted in, advances are higher than declines, but let's see how things really pan out. But with that, completely timed out. Thanks a lot for tuning in. Stay tuned to Money Control. For all your other news and updates, I'll see you at 3:30 p.m. with Closing Bell.